Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to tell you how BTA analyzes the market, how we look at the markets. This is Rod from BTA, and we are known as the middle traders. Okay, we have a daily chart here of the Dow Jones Industrial Average, the actual index itself. So we're going to do an end-of-day analysis. The market is closed now, so we're going to do an end-of-day analysis and see how our charts are setting up, because we eventually, if possible, want to take a position, right, in one of the major ETFs, major index ETFs rather, and then try to find some leading stocks and leading industry groups starting to break out. So this is a daily chart of the Dow Jones Industrial Average, the actual index itself. And as you can see, we are still stuck in this sideways channel. Okay, we still stuck in this sideways channel. Let me maximize this. Let me zoom in rather a little bit. And so you can see it. So we're still stuck in this sideways channel. So we've been moving sideways now for almost 8 days. So here we go. Sideways for almost 8 days. So we're still stuck in this sideways channel. So it's not much to talk about here. No matter how, the market pulled back, it ran down to almost near the, I think, it almost touched the 100-week moving average, and then it bounced up. I believe that it was the Dow that did that. And so it did rally hard off the bottom, and it rebounded pretty decent off of the opening this morning. We had a bad open this morning, and it rebounded pretty good. But at the end of the day, we still stuck inside this sideways channel, and we have 32,272 at the top and 32,509 at the lows, and we have 272 at the top. So we have to get above this day here high and this day's low to try to break outside of this channel. All right. So we got 8 days of sideways movement. We did get above this weekly longer term resistance on the weekly chart, and we got above the daily overhead resistance today, but we still moving sideways. So we have to see what happens tomorrow and see if this if the Dow Jones can break out of this sideways consolidation that we in. Now let's look at the Standard & Poor's 500, the actual index itself, the Standard & Poor's 500. And once again, we got sideways movement. Okay, we're going to zoom in. And once again, we're moving sideways on the Standard & Poor's 500. So we got to get above this high, and we got to get above. If we're going to break down, we got to break down below these lows. No matter what, at the end of the day, we got 8 days of just sideways action inside of this channel. So we're moving sideways. Maybe tomorrow is the breakout. Maybe tomorrow is going to get above this high on the Standard & Poor's. The high is 41.77. Okay. And then the low is over here at 4,073. So 41.77 is the high. 4,073 is the low. Okay. Can we get above this high and break out? All right. That's the question. Today it did bounce pretty good off of lows. It opened up lower, traded down, and then it rallied. So that's fine. But it's one problem with this rally that we had today off of the lows when it found support. And we're going to talk about that when we look at the daily charts. Well, you'll see it on the next workspace. Okay, well, here's the Nasdaq. Okay, here's the Nasdaq. Let's expand. Let's zoom in. And what did the Nasdaq do? Same thing. okay, is moving sideways. So we still really didn't go anywhere. A lot of movement inside of here, a lot of big up and down price swings, but we're not day traders. That's not what we do. We didn't go anywhere. So for the Nasdaq, we got to get above 12,377 basically, and then we got a low over here. You might as well use this low right here, and that's roughly let's see, that's a low of 11,856. So at the end of the day, we got to get above this high and this low. All right, so that's what we're looking at. It's moving sideways. All right, it hasn't really gone anywhere. It still hasn't gone anywhere, basically. Okay, for the last 8 days. Now, let me show you what my problem is with this whole thing. Okay, and this is the problem. This is the problem. Let's go to the next workspace. Okay, with our moving averages. Let's go into the Dow Jones Industrial Average. Okay, this is you're gonna see what my issue is with this setup. Okay, with what we're seeing right now. I'm gonna look at this. Let me zoom in. Okay, let me zoom in, and look what you see. We right at the 50-day moving average. Okay, on the Dow Jones Industrial Average. Here's the downtrending 50-day. And now we got the 21-day moving average right below. So we basically still squeeze between a 50-day moving average and a 21-day moving average. Now, granted, what's good about this is the 9-day moving average is constantly moving up. Okay, and the 21-day moving average, the yellow moving average line, is also kind of sloping up a little bit sideways, but sloping up. So that's good. The 50-day moving average is downtrending, but it's kind of flattening out and moving down. So we squeeze between the 50-day moving average and the 21-day moving average right now. Hey, we might break to the upside. You know, it's possible. But right now, we're still within a sideways range. So we can't do anything as far as we're concerned until that resolves itself. We're squeezed. We're squeezed between a downward trend into sideways 50-day moving average and a sideways to flat, slightly upward 21-day moving average. Okay, the 5-day moving average is flattening out a little bit inside of the price range. But this is one of the major problems I got. Why is it that we're not seeing any big above average volume coming into this market? Okay, the volume is pretty much low. Okay, the biggest volume day we got right here was on a down day. That was the one above average volume day we had since the first day rally attempt back here. That's not really what I want to see, but let's just say this. When we break out of this channel, this sideways channel, we need to see some above average volume. Okay, showing us, giving us a clue that the institutional investors are buying into this market. If we break below the 21-day moving average and break below this channel on above average volume, that's going to be telling us that they're selling it off and it's a problem. All right. So we're going to be watching the breakout of this sideways channel, this consolidation area, and see what kind of clues the volume is going to be giving us. Okay. Now, let's look at the Standard & Poor's 500 daily chart. Okay, with the moving averages, and let's see what we can get out of this. Okay, and let's zoom in a little bit. All right, look at that. We got a downward trending 50-day moving average. It's downward trending 50-day moving average and a downward trending 21-day moving average. We're still stuck within this channel. We had that bounce. It was slightly higher volume today than the previous day, so that's going to be counted as accumulation almost, right? Because it's slightly higher, all right? But we still stuck within this sideways channel, and we don't have, it was a nice bounce today, but when are we going to get some of that above average volume, okay? Now, it's true, when you're getting into a base pattern, okay, so this is looking like it's starting to form up as a flat base, a sideways consolidating pattern. Volume usually dries up within the base. That's fine. I understand that. I agree with you on that. If you're saying that to yourself. But let's see when it breaks out. Is that volume going to come in? Okay. Like I said, if it breaks to the upside and we get that above average volume, that's our clue that the large institutional investors are buying into it. If we get a break to the downside out of this consolidation, test the 21-day moving average, and break through it on above average volume, that's telling us that they're dumping it. Okay. They dumping this market. They dumping these shares. All right. So let's look at the Nasdaq Composite. Okay, the actual index. Right, we're looking at the actual index, the Nasdaq Composite. Right, we're gonna zoom in so we can see it clearly. All right, we got that overhead downward trending 50-day moving average. We found support at the 21 and the 9-day. The yellow moving average line in the green. The yellow moving average in the green found support. Once again, we got that flat 5-day moving average inside the price. Okay. This downward trending 50-day moving average and the sideways 21-day moving average, while prices are stuck within this consolidation, is what we got to keep our eye on. All right. The same as with the Dow and the Standard & Poor. We had lower volume than the previous day, so it was no accumulation on the Nasdaq. Now the IWM, if you're just looking at price action, if that's all you're concerned about, well, it looked really good today. All right, the IWM looked really good today. Let's expand this. Look at that IWM. It broke out of this sideways consolidation, got well above the 50-day moving average by $2. Okay, the 9-day moving average, which is the green line. Here's the 50-day moving average. We got well above it today. The 9-day moving average is trending up, pushing prices up. The 21-day moving average is pushing prices up. The 5-day moving average is trading up. And if you notice, we closing above that 5-day. I got to hand this market that. Okay, here's that 5-day moving average. That was our first day rally attempt. We got above the 5-day and the 9-day. And every day after that, we have been closing above the 5-day moving average. Granted, I give this market that. And today we got above the 50-day moving average. But this right here, lower volume than the previous day and much lower than the average volume. This is the 50-day average of volume, that line right there going across those volume bars. Look how low it is. Look how low that is. And lower than the previous day. Today's volume is lower than the previous day and well below average on what's supposed to be a very strong breakout for the IWM, the ETF that tracks the Russell 2000. It went up 1.35% today, bounced off the 9-day moving average. Well, where's the volume? Where's the beef? As they used to say back in the days. Where's the volume, man? It's just not there. Okay? It's just not there. So, look, this got me a little skeptical. I'm just sorry to tell you. I mean, look, I don't like to take chances. I like to trade with the highest probability of success. And right now, the volume is not there. But, I mean, it's a lot of improvement on the guppy. Okay, we right back testing those upper longer term moving averages. We start breaking through there. Then I might have to give it up to this here thing. Is slowly climbing the wall of worry. You know, we all worried, and it's slowly ticking its way up. Well, here the longer term, faster red moving averages, and the magenta line of closing prices is trying to make its way through right today. Look at that. It's getting up there toward the top, the upper moving average line right here, the longer term moving average line. The green shorter term moving averages have flipped up, and they starting to expand as of today. The magenta line of closing prices, it moves sideways, but it's trying to make its way through the longer term downward trending red longer term moving averages for the Dow Jones. This is the Dow Jones Industrial Average daily chart of the guppy. So that's some improvement. We have to see if that's going to continue. Are we going to break out of that sideways channel? Okay, get above that downward trending 50-day moving average and break above all of this longer term red, longer term moving averages on the guppy. If that happens, then well, and some volume coming in. I guess we gotta hand it to the market. It's climbing the wall of worry. All right. Here's the shorter term green moving averages that flip and they're expanding up. This is a daily chart of the Standard & Poor's with the guppy. And here's the longer term downward trending red moving averages. The magenta line of closing prices is right inside of it. Are we going to make it out of it, or are we going to find some turbulence like we did here and here and pull our way back down and stay wrapped inside this channel? Well, I don't know. But if we monitor the charts daily, each day, and it's going to tell us, all right? I'm not worried about missing nothing. I don't have the fear of missing out of anything because I already know if this market has got some teeth and is going to rally back to all-time highs or the high of the yield curve inversion, then there's a lot of stocks that still hasn't participated that's going to start setting up and breaking out. That's just the way this works. So I'm not worried about it. When you see the percentage of stocks above this 200-day moving average, you'll see why. I'm not worried. Okay, so here is the Nasdaq Composite. Here's the shorter term green moving averages. Okay, they have flipped and they turning up. They starting to expand a little bit. Here's a longer term downward trending, longer term red moving averages here. All right, the magenta line of closing prices is just starting to find support at the shorter term moving averages, the green shorter term moving averages, and now it's trying to see if it can make its way up through the longer term red moving averages. But you see here and here, we found turbulence once before and it pulled back. Is it going to do the same thing? Well, I don't know. Listen, we're coming up on some key inflation numbers on Friday. They tell us now if those inflation numbers show us that inflation may be starting to peak, I would be looking out for a surge in the market, okay? If they start to show that inflation is peaking. We got those inflation numbers coming out on Friday. But if that thing shows that inflation is not peaking and is actually increasing, look out below. All right. Now here's the percentage of stocks above their 200-day moving average for the total U.S. market. That's what we're looking at here. The percentage of stocks above its 200-day moving average for the total U.S. market. You see why I have no FOMO? Why I don't have the fear of missing out? Because only 22% of the total U.S. market, 22% of the total U.S. market is above its 200-day moving average, is long-term moving average, okay? When you get above the 200-day moving average, you're said to be trending up, and the long-term trend may be up. Like Paul Tudor Jones said, when you're above the 200-day moving average, I'm only buying stocks and I'm not going short. I'm not shorting the stock above the 200-day moving average. Well, look, here's our red 40 line way up here. That's our red light. That's our signal that when you get below 40% of the total U.S. market above its 200-day moving average, we got problems. Right now, we at 22%. We got a lot of stocks that can make improvement before you can start thinking that you're missing out on anything. I'm not worried about that. All right. So here now, just not worried at all. Not at all. Okay. So here is the percentage of stocks above its 200-day moving average for the Standard & Poor's 500. Okay. Let's expand this. The 500. All right. Look at it. Only 35%. It's still moving sideways. It's been fluctuating up and down for the last couple of days. It's not surging to the upside. Here's the 40 line. That's the line that tells us, hey, if you're getting below 40% of the Standard & Poor's above its 200-day moving average, look out. We're getting into correction territory. If it gets so low, down here near the 20s, we're looking at bear market stuff. Bear market stuff. Okay? There ain't no ifs, ands, or buts about it. The bear is out, all right, when you start getting down there. Right now, we have 35% of the Standard & Poor's 500 above its 200-day moving average. Well, it's not that great. And for the Nasdaq, look, I tell you straight up, we ain't got to do a whole lot of expanding and zooming in. The Nasdaq only got 18% of the Nasdaq above its 200-day moving average. Only 18% of the Nasdaq is above its 200-day moving average. Why should I be fearing anything? I don't have no FOMO. If this thing was to work, only 18% of the Nasdaq is above its 200-day moving average. If this thing was to work, we got a lot of improvement. Look, as far as our advanced decline line, differential, invisible chart, it looks okay. We got our green arrow. Granted, that's all great. What's troubling to me with this thing is that this 50-day moving average just will not turn up. The best, I wrote a note right here, the best signals are when the 21-day and the 50-day MA is trending up. That red 50-day MA just will not get into an upturn. It just won't do it. All right. So with that being the case, this is a little concerning to me. But the chart doesn't look bad. Okay. I have to admit that. Now here's the Standard & Poor's 500. That was the Dow Jones. Here's the Standard & Poor's 500 invisible chart, advanced decline in issues, invisible chart. And look at the 50-day moving average, the red line. I mean, the yellow and the green is back above zero. They both are pointing up. But that 50-day average is below zero and it's flat. We need this thing to turn up. Okay? We do got our green arrow telling us it was okay to start buying some stock. We did jump in on the fall today. We took the profits. It got into a sideways consolidation. Now we're waiting. Okay? Well, is that 50-day moving average, that red line, going to start turning up with the yellow and the green? Or are those two going to turn down and meet with the 50-day moving average? Well, it all depends. We'll see. Okay? But the only thing we can do is keep an eye on it every day. All right? Here's the Nasdaq, okay, advanced decline in differential chart, invisible chart. Look at the 9-day moving average. The green line is above the yellow. It's above the red. It's above zero. The yellow 21-day average of it is above zero. But look at that flat 50-day. It's flat. It is flat, okay? The best signals is when that yellow, the 50-day and the 21-day, the yellow 50-day, the yellow 21-day and the red 50-day moving average is turning up. That is the best signals, okay? Now, everything was so great today, right? The Nasdaq went up almost 1%, okay? But look at this here chart, right? Okay? Look at this chart. This is the number of stocks making 52-week highs and making 52-week lows in the Nasdaq Composite. Up here, you got the number of stocks making 52-week highs. This is our crayon line. That tells us when we got at least 5% of the index making 52-week highs. If you look over here, see that histogram bar is above this crayon line? That means more than 5%. More than 5% of the Nasdaq, which is equivalent to about 150 stocks, are making 52-week highs. You see, we have it here again. We haven't seen that yet. Okay? It did not happen today. Only 55 stocks made 52-week highs. But look at these 52-week lows down here. Look at the crayon line right here where it signals out what marks our 5%. Well, guess what, y'all? We see it constantly being more than 5% of the Nasdaq hitting new 52-week lows constantly. And look what happened today. We had 178 52-week lows compared to new 52-week highs, only 55. We are constantly getting above 5% of the Nasdaq hitting 52-week lows. We had an update today. It went up almost 1%. Well, what's interesting is that it's still a whole heck of a lot of stocks still collapsing, hitting 52-week lows. 52-week lows, low at the low at the low at the low, yearly low. Okay, when the market is supposed to be going up. If anything, I'm not saying we have to have a whole bunch of new 52-week highs. Granted, stocks is really low right now. The trends have been down. They're well off of their yearly highs. I understand that. So I'm not looking for a whole lot of 52-week highs. But what I would say is, why is so many stocks still hitting 52-week lows? They're constantly still going down. That should change soon when you notice that, when you really start seeing the index making some progress, that's going to change. Okay? that will change when you start seeing the index making some progress. So it's telling me that things just might not look as rosy as you think. Okay. Now, so that's pretty much looking at the daily chart, analyzing the actual indexes themselves on the daily charts. In the next video, we'll be looking at the weekly and combining that with a little bit of the daily chart analysis for the ETFs that track the major indexes, right? The major index ETFs, the vehicle that we use to trade if we want to go long or short the major market indexes. So in the next video, we'll be looking at the weekly charts of those indexes, the DIA, the SPY, the QQQ, the IWM, the ITOT. Okay, we'll be looking at those ETFs to see, can we find any clues about what direction the market may go in. But at the end of the day, we're going to walk with it. All right, see y'all in the next video.